The subcommittee will come to order. Without objection, the chair is authorized to declare a recess of the subcommittee at any time. Members of the full committee who are not members of the subcommittee on terrorism, illicit finance may participate in today's hearing, and all members will have 5 legislative days within which to submit extraneous materials to have the chair for inclusion in the record. This hearing is entitled Implementation of FinCEN's Customer Due Diligence Rule, Regulator Perspective. I now recognize myself for 3 minutes to give an opening statement. I want to thank everyone for joining us today. Today's hearing will examine the implementation and enforcement of FinCEN's Customer Due Diligence Rule, along with its compliance requirements for financial institutions. Last week, the Customer Due Diligence Rule went into effect, capping a 6-year effort by FinCEN to address shortcomings in our anti-money laundering and countering terrorist financing regulatory regime. I want to applaud FinCEN for the work in this area. As chairman of the Terrorism Illicit Finance Committee, I've heard testimony from a variety of experts in the field of detecting and pursuing criminals in the financial system. Many agree that a critical component of success in these investigations is law enforcement's timely access to beneficial ownership information of shell corporations being used to further criminal endeavors. The CDD rule requires covered entities, including banks, brokers, or dealers of securities, mutual funds, and futures commission merchants, to identify and verify any beneficial owner who directly or indirectly owns 25% or more of the equity interest in a legal entity, along with a single individual who exercises control over the legal entity at the time of account opening. Although we agree on the importance of this information, there are legitimate concerns about the application of this new rule and the impact it will have on financial institutions. As the GAO reported in February, banks in the southwest border regions are de-risking specifically because of concerns with BSA compliance. Adding additional requirements will likely increase this occurrence and cut business off from the financial system. Outstanding questions also remain for institutions that are working to ensure compliance with the CDD rule, including what an appropriate risk-based approach to collection entails. I look forward to the Director's opinion on these issues. Today's hearing is an opportunity to discuss the implementation and enforcement of FinCEN's CDD rule and the impact it will have on our financial institutions. I hope our members will take this opportunity to learn from our witness about the benefits of collecting beneficial ownership information and how FinCEN plans to work with bank examiners and financial institutions to implement and appropriately enforce the CDD rule. I'd also like to thank Director Blanco for being here today. Look forward to his expert testimony. The chair now recognizes Mr. Perlmutter for 2 minutes.
Thanks, Mr. Chair. Mr. Blanco, thank you for being here. Thank you for your service. The lack of transparency in our financial system has created an environment where criminals who should be shut out of the financial system can use anonymous shell companies to launder money, finance terrorism, and engage in other illegal activities. In the last few years, high-profile leaks such as the Panama Papers and Paradise Papers have highlighted this tactic and the need for Congress and agencies to address beneficial ownership and financial transparency. FinCEN's Customer Due Diligence Rule seeks to take an important step in requiring beneficial ownership information and preventing criminals from hiding from law enforcement through anonymity. I look forward to your testimony on the implementation of this new rule and our discussion about how FinCEN and this subcommittee can continue to improve our anti-money laundering system and reduce illicit finance. Obviously, some of the banking institutions that we hear from time to time feel that this puts a little additional burden upon them, and we've had complaints about that. But I think from a law enforcement point of view, the need to know who owns a particular entity is very critical, and so we want to hear about kind of the benefits and the burdens of this rule, and I thank you today in advance for your testimony.
Chair now recognizes Mr. Pittenger for 2 minutes for an opening statement.
Thank you, Mr. Chairman, and Ranking Member Perlmutter for holding this hearing today. I'd also like to thank our distinguished panelist, Mr. Kenneth Blanco, for his testimony to our subcommittee this afternoon. As the Director of the Financial Crimes Enforcement Network, commonly known as FinCEN, His division is responsible for the enforcement of the customer due diligence rule, which went into effect May the 11th. Last month, this committee's Subcommittee on Financial Institutions, which I am also a member, heard from legal and issue area experts on financial institution perspective. I'm looking forward to Mr. Blanco's testimony on the regulatory perspective and hearing his thoughts on how we can encourage information sharing while still providing banks clarity and not placing additional burdens on their customers. Banks value legal compliance, but especially mid-sized banks value their customers' experience. We must ensure FinCEN is providing banks with adequate information to ensure their compliance, that there's no unintentional non-compliance. Thank you, Mr. Chairman. I yield back the balance of my time.
Gentleman yields back. Today, we welcome the testimony of Mr. Ken Blanco. He's the director of the Financial Crimes Enforcement Network, FinCEN, in the U.S. Department of Treasury. Mr. Blanco joined FinCEN in 2017 after serving as the acting Assistant Attorney General of the Criminal Division at the United States Department of Justice. During his tenure with the Criminal Division, Mr. Blanco oversaw a number of its sections, including the Money Laundering and Asset Recovery section, formerly the Asset Forfeiture and Money Laundering section, the Narcotic and Dangerous Drug section, the Organized Crime and Gang section, the Childhood Exploitation section. Mr. Blanco has supervised many of the Criminal Division's most significant national and international investigations into illicit finance, money laundering, Bank Secrecy Act, and sanctions violations, including the investigation of global financial institutions and money service businesses. Mr. Blanco joined the Department of Justice almost 2 decades ago as an assistant United States attorney in the Southern District of Florida. Prior to joining the Department of Justice, Mr. Blanco began his career at the Miami-Dade State Attorney's Office, where he served in various sections, including the Organized Crime section, Public Corrections section, and the Major Narcotics section. Mr. Blanco earned his JD from the Georgetown University Law Center, where he also currently teaches as an adjunct professor of law. You'll be recognized now for 5 minutes to give an oral presentation of your testimony. Without objection, your written statement will be made part of the record. Mr. Blanco, you're recognized for 5 minutes.
Thank you, Chairman Pierce, Ranking Member Perlmutter, and members of the subcommittee. Thank you for inviting me to appear today on behalf of the Financial Crimes Enforcement Network, FinCEN, to discuss our efforts to safeguard our nation's financial system by increasing transparency through the implementation of our Customer Due Diligence, or CCD, rule. I have prepared a written statement that I would like to submit for the record, Chairman. Prior to my appointment as the 8th director of FinCEN just a few months ago, I had served for almost 3 decades as a prosecutor in both state and federal offices, and for the last decade at the highest levels of the Department of Justice. Over those 3 decades, I saw firsthand the importance and power of our financial system and the need to keep it safe and secure. I appreciate the opportunity today to discuss how the CDD rule and its compliance requirements for financial institutions advances our mission of keeping our financial system secure, our nation safe and prosperous, and our communities and families safe from harm. The reach, speed, and accessibility of the U.S. financial system make it attractive to criminals, terrorists, state actors, and other bad actors. In response, we have developed and rigorously enforce one of the most effective AML-CFT regimes in the world. Nevertheless, as strong as our AML-CFT framework is, bad actors will continue to exploit its vulnerabilities to move their illicit proceeds undetected through legitimate financial channels in order to hide, foster, and expand the reach of their criminal and terrorist activities. The misuse of legal entities to disguise illicit activities has been a key vulnerability in the U.S. financial system. This is not breaking news. Corporate structures have facilitated anonymous access to the financial system for criminal activities and terrorism. Transnational organized crime syndicates, rogue states, human traffickers, terrorists, and other bad actors have been able to establish shell companies and then open accounts in the names of those companies without ever having to reveal who ultimately stands to benefit, masking their identities, hiding in the shadows, and making it difficult for law enforcement to pursue investigative leads, and for financial intelligence units like FinCEN to generate those leads in the first place, putting our nation and our people at risk. An open and transparent financial system in which we can identify the transactions and account owners is therefore essential to disrupting and dismantling criminal and terrorist networks that seek to exploit our system and do us harm. For these reasons, FinCEN and the Department of Treasury have prioritized increasing transparency in corporate formation and have strengthened regulatory requirements regarding customer due diligence for legal entity customers when they open accounts at financial institutions. FinCEN finalized the CDD rule on May 11, 2016. The CDD rule was the result of extensive and thoughtful engagement with industry and with other stakeholders, notice and comment, hearings, and other discussions over many years about the benefits of the rule as well as its potential burdens. The CDD rule clarifies and strengthens customer due diligence requirements for covered financial institutions by streamlining and standardizing existing regulatory requirements and adding a new requirement for these financial institutions to know and verify the identities of the actual people who own, control, and profit from companies, also known as beneficial owners. The CDD rule advances the purpose of the Bank Secrecy Act by making available to law enforcement vulnerable information needed to disrupt financial networks and other criminal organizations and terrorist networks. This, in turn, increases financial transparency and augments the ability of financial institutions and law enforcement to identify the assets and accounts of criminals and national security threats. It also facilitates compliance with sanctions programs and other measures to cut off financial flows to these bad actors. I understand that this committee has been interested in the readiness of both industry and government regarding the CDD rules implementation. To that end, I can report that FinCEN has been working collaboratively and regularly in ongoing discussions with our regulatory counterparts and industry to ensure a common understanding of consistent compliance standards within and across regulated industry sectors. This is especially important when we issue a new rule. We understand and we appreciate that there will be a period of fine-tuning for compliance industry with the examination process itself, both of which will take time, and we know that new questions often emerge when implementation begins. The purpose of the rule is to enhance AML-CFT, not to serve as a vehicle to punish financial institutions. We are committed to continue working with our partners, agencies, and industry to ensure that covered financial institutions are also implemented the rule effectively in a way that makes practical sense, and we understand that it won't happen overnight. In the meantime, we encourage our financial institutions to alert their examiners and us and to share their issues and concerns. Chairman Pierce, Ranking Member Perlmutter, I look forward to answering your questions. Thank you.
Thank you, sir. I'll now recognize myself for 5 minutes for questions. And so I guess one of the key things is if you've got any information on the cost-benefit analysis. In other words, there are lots of speculations on how much it's going to cost our banking system. So have you got that information? You might turn on your mic.
That would help. I don't have the specifics as far as the numbers. We can get you those numbers with respect to the cost-benefit and how much that is going to cost. Okay. I can just tell you, Chairman, through my experience of 29 years in law enforcement, the benefits are really important and critical to law enforcement, and I think very critical to the financial institutions in order for them to be able to do their due diligence as we move forward. The information, I've only been at FinCEN for 4 months. I can tell you the information that we collect from the financial institutions and the way we use it is critically important for our mission. Okay. On the Southwest, where New Mexico lies, the reports have something like 80% of the banks have chosen just to eliminate accounts for people who might draw too much attention, so the de-risking. So how do you approach that problem when you're talking about this further requirement? Chairman, I don't think this further requirement is going to exacerbate any of the de-risking that is happening in the southwest border. What we plan on doing is talking with those banks and industry in that area to see if we can come up with any solutions to those issues that they are seeing. I can tell you we have an outreach program at FinCEN that is very robust. Where, in fact, this morning I met with the Florida Bankers Association. So we are listening to their comments and understanding what they have, but I don't think that the CDD rule is going to do anything to further what is happening in the southwest border.
Now, there are critics of this CDD rule and in our attempt to quantify in law the same concept, who declare that this is, that the information is readily available right now, that the IRS has the information. Did you look at other agencies, other less intrusive ways, if this is intrusive? Tell me a little bit about that.
I can tell you, Chairman, that what has happened with respect to the information that the IRS receives, that's very different kind of information, and the way to get the information is much more difficult than what we are proposing. Having been on the other side and being a prosecutor trying to get that information, you would have to get a court order to get the IRS information, first of all, which takes time, and it sort of defeats the purpose of your AML risk assessment. In addition, the information that's contained in the IRS records are very different. It's not as specific as the information that we're looking for. It's a little different. It doesn't specifically go to equity owners, and it doesn't specifically go to sort of what we have as a control prong for beneficial owners. It's a very different standard, much more simple than what we're asking for. Doesn't really get to the point of who actually owns and who actually controls the entity that we're looking at.
Well, that question of who actually has say-so over the company is one that has drawn questions also. The language, I think, says that anyone who has significant input, or whatever the language is. How are the banks to interpret who actually has that kind of input? What kind of guidance can you give them?
So in the guidance that we have provided through the FAQs that we provided both a year ago and just recently, it's pretty clear that somebody who has some kind of decision-making, whether it's in a control position, somebody who has a stake in the corporation as far as making decisions, that is really what we're looking for. Who maintains the actual control, or do they have a decision-making process within the company? That's what we're looking at. And if you look at the IRS, what they ask for, it's somebody who has some kind of responsibility, which is very different, and that's more of a, I think, mushy kind of standard. We're looking for somebody who has control, makes decisions. That's what we're looking for.
Now, there have also been statements that this is going to be very onerous to the small businesses. Tell me a little bit about what you visualize the form looking like that the banks are going to get filled out.
So, Chairman, as you know, we have a form that's attached to our website that they can take a look at. I have a copy of it here. We're happy to give you a copy of it. It really is very simple, and it asks for very simple things. It asks for, on the customer side, the name, legal entity, the address, the zip code, the name of the person who is the customer. Then it goes into who is the equity owner. Who are they? Is there anybody who has 25%? If so, you have to list who they are. Name, address, social security number if that exists, or foreign identification number if that exists as well. They could also, if they wish, get a copy of the driver's license. It doesn't have to be the actual driver's license that they have to see. It could be a photocopy. And then it goes into the control prong, and that is an individual with significant responsibility for managing or directing the entity. It's a very simple form. They don't have to use this form. Banks can use their own form consistent with whatever software or products that they are using, as long as it has that kind of information in it, 4 or 5 key points. That's all we're looking for. It's very simple.
Okay. My time has expired. I would recognize the gentleman from Colorado, Mr. Perlmutter, for 5 minutes.
Thanks, Director, and I like terms like mushy. So we'll get to mushy in a second. But, the debate for us is, whether it's most of lower Manhattan coming down, or the Murrah building in Oklahoma City, or some kind of terrible act, we want to try to stop those things. Yeah. And so the costs of those are enormous, if calculable at all. The costs of the compliance certainly are there. So between the chairman, Ms. Maloney, Mr. Hill, we've talked about secretaries of state, we've talked about the IRS, we've talked about the lawyers, we've talked about the bankers. Somebody have some responsibility to help you as the head of FinCEN and the FBI and elsewhere have good information that stops some terrible act that harms Americans.
Yep.
So let's just go back to basics. How prolific, I mean, how often in your experience as a law enforcement agent have you seen shell companies come into play to hide bad actors?
All the time.
So explain that.
It's not a secret. It really isn't. I mean, even when I was a young prosecutor at the state's attorney's offices when we were doing financial crimes, people would hide behind shell corporations all the time. And yeah, eventually you might find out who owns it, maybe. That time expended in trying to figure that out and the hoops that you have to jump through, by that time, those criminals have already left and gone and either defrauded the elderly person who they were defrauding or committed whatever act they're going to commit, transferred the drug money if they had to transfer drug money, or took their human traffickers and already sold them into human trafficking. They're done. What this does for us is even if the information that is provided to us is false, let's just assume that, because I've heard that. People say, well, Ken, how are you going to get them to provide you truthful information? The fact that they're providing false information to us is a key indicator of who you're dealing with at that point, right? And it gives you a lead of how you should be investigating these people, and it's a red flag. So, but let's just assume the information is correct, which I think much of it will be. It gives you leads. The time you are saving in doing your investigation is exponential. For example, a terrorist act, and many of you may understand this, we have a group that responds 24/7. They come into the FinCEN office. We run names, we run numbers, we run phone numbers, we run corporations. Without the beneficial ownership information, it takes a lot more time. With that information, both at the time of the account being opened and frankly at the time the business is incorporated, it's going to be critical for us to respond. It is about stopping acts before they happen. And this critical information, which is very simple information, it really is. We're not asking for a lot here. Very simple information that gives us a heads up of what's going on. I'm sorry, I'm talking a lot. Mr.
Well, so my question was, you talked about at sort of the formation of the company. How often do you update this through your particular rule? Is it every month? Is it upon a loan renewal? Is it a change of somebody who signs the credit card? What is it?
Yeah, so those are triggering events that would cause you then to update it. And that is, we've been having a lot of conversation with both industry, and we've been having a lot of conversation with law enforcement. And the way that we have left it with industry and law enforcement is that through your normal AML program, whatever AML program you have, if you notice that there has been a change event, a triggering event, that's when you update it. Triggering events can be all kinds of things. They could be an extensive money flow that all of a sudden appears in the bank account. That sort of gives you indication something is different. Change in ownership, different name being used, a different account being opened. I mean, all those things that are sort of common sense would cause us to update the beneficial ownership information.
So just if I were the banker at that point, and there's a new signer on the account, new signatory on the account.
Yeah.
Is that a triggering event? And, I mean, the question I have, and I think you're on the right track. I'm not fighting with you on this. And,
no, I got you.
And you used the word fine-tuning, and that's what this is going to be. But, you know, just from if I'm that banker, I mean, every time that customer walks in the bank, is that a triggering event? And how often are you expecting stuff from these guys? Because it sounds like a lot.
Well, I mean, not every time a customer walks in the bank, I don't think that's a triggering event. But let's just say there's a new signatory on the account. Yeah, I think that's a triggering event. That's a changed circumstance that you're going to want to take a look into, and you may want to verify the beneficial ownership information. And in our FAQs, we also said, look, you can also just update the information as long as you get an oral or verbal confirmation that the information is still correct, except there's a different signator or a changed event. It doesn't have to be a drastic event. We're not looking for you know, things that are very rote. We just want people to think. What would cause them to want to update the beneficial ownership information? What makes sense? What is the triggering event? And like you said, we're going to be working through this and with industry and with law enforcement. We're not using this as a hammer on anybody. It's not a gotcha game. What we're trying to do is make sure that we have the right information.
Thank you, and my time's expired.
Gentlemen's time's expired. The chair would now recognize Mr. Pittenger for 5 minutes, and be advised that we have just had a vote called. There's 14 minutes left in that, so we'll take probably 2 more rounds of questions. Mr. Pittenger and Ms. Maloney, I think, would be the next. So we'll try to get those in. Then we'll take a recess for votes and return to the hearing. So, Mr. Pittenger.
Thank you.
Thank you, Mr. Chairman. Thank you again, Mr. Blanco. It seems to me that the new CD rule makes financial institutions weigh convenience and customer experience against cost compliance. Do you think that that's an accurate assessment?
I'm sorry, sir, I could,
Makes the financial institutions weigh convenience and customer experience against cost and compliance. Do you believe that that is a valid and accurate assessment?
look, yes, one could assume that that's a valid assessment. I think here, though, when we talk about costs weighed against, a secure financial system, I'm not so sure we're talking about costs. I think what we're talking about is a financial system that is safe and secure, that everybody can benefit from, including the banks and including the customer. And the customer, too, also wants a secure financial system so that they can put their money in a place where they can invest and make sure that it's safe and secure. So I know we talk a lot about costs, but I can just tell you what we're asking for is something very simple. I cannot imagine it costing too much.
Yes, sir. Well, do you think, with that in mind, that some institutions will opt to de-risk some customers due to the difficulty in understanding the CDD rule or complying with it?
I hope that does not happen. We're going to look for that. We take de-risking very seriously. We believe people should have access to capital and access to the banking system, and we want to make sure that that happens. May it happen? It might, and those are things that we're going to take a look at and make sure that those things do not happen for the wrong reasons. They may de-risk them for other reasons, but we want to make sure it isn't because of this.
Sure. Mr. Blanco, it's my understanding that the CDD rule will only apply to new accounts opened after the effective date.
That's correct.
If that's true, what happens to a financial institution if they fail to meet the new CDD rule requirements?
So we have spoken with our regulators, right, and we've spoken with institutions, our financial institutions, and we know there's going to be this time period where everybody's adjusting to it. Sure. And all we're asking for is that they have a good faith effort to comply with it. We're not using it to ding anybody. We will work with them. We have fielded hundreds of questions since this came out in 2016, actually thousands of questions, and we're going to continue to do that. It's not a gotcha game.
Yes, sir. Well, with that in mind, would a financial institution be restricted with their customer accounts across the entire customer relationship or solely with respect to the new accounts opened after the implementation date?
I'm sorry, sir. I'm having trouble understanding.
Yeah, I understand. Would a financial institution be restricted with their customer accounts across their entire customer relationship or solely with respect to the new accounts opened after the implementation date?
If I understand your question correctly, you're talking about a customer across their entire relationship with the bank?
Versus the new accounts opened.
I mean, once they start opening new accounts, and remember what we're talking about here are legal entities, right, that are opening new accounts. What the financial institution will have to do is make sure that it corresponds correctly with the other information that they have on other accounts, yes.
FinCEN released 2 sets of FAQs, one in 2016 and then one in the final days before implementation to help bring clarity to the CDD ruling. However, these FAQs do not specify the extent to which a financial institution should integrate technology changes to the better use of information it obtains through CDD. Is there any clear guidance on what to do with the information once it is gathered and how it should be used to enhance AML programs?
We can provide better guidance, Congressman, but I believe in the FAQs themselves, they talk about where the information should be stored and how it should be used in the regular course of their AML CFT risk assessment. That is something that they can use in the normal course of how they review their risk with respect to that one client.
Well, then how would or should the information then be integrated into the transaction monitoring or sanctions compliance programs?
In the normal course, each of the institutions has their own procedures and policies that they use, and it should just be done with their normal policies.
Thank you. I yield back.
Mm-hmm.
Gentleman yields back. The chair would now recognize the gentlelady from New York, Ms. Maloney, for 5 minutes.
Thank you, Mr. Chairman and Mr. Ranking Member, for calling this hearing, and thank you, Director Blanco. And as you know, I've had a a bill in on beneficial ownership at the request of law enforcement for quite some time. And I think that the customer due diligence rule is a huge step forward. I support it, but I also believe that the responsibility shouldn't be entirely on financial institutions. Banks should know their customers, but it shouldn't be this hard to figure out who their customers really are. And law enforcement and banks have expressed to me that they are unable to figure out who these people are. That's why I've introduced a bill, the Corporate Transparency Act, that would require companies to disclose their beneficial owners at the time they are formed, and then financial institutions would have access, and law enforcement, to that beneficial ownership information so that they can assure themselves that these companies that open accounts with them are not money launderers, sex traffickers, or other types of criminals. Under my bill, FinCEN would be in charge of collecting this beneficial ownership information. And in your view, should companies be required to disclose their beneficial owners at the time they are formed?
Yes.
And is FinCEN capable of maintaining a database of beneficial ownership information that would be available to law enforcement and financial institutions?
Congresswoman, if that's what ultimately happens, we have to keep in mind that we're going to have to be well-resourced in order to do it. If you're asking me today if we're well-resourced to do it, I would tell you it would be very difficult for us to pull that off. So if, in fact, the ultimate decision is going to be to have FinCEN house it, then we're going to have to be resourced to do it, but we can do it.
Great. Do you think that a bill that would have FinCEN collecting beneficial ownership information and then allowing financial institutions to access that information from FinCEN would complement your customer due diligence rule?
I do.
Great. And in 2016, FinCEN issued 2 geographical targeting orders covering Manhattan and Miami that required title insurers to collect beneficial ownership information for any legal entity making all-cash real estate transactions. And the findings from the first 6 months were just shocking. FinCEN found that about 30% of the transactions reported involved a beneficial owner or purchaser that had previously been subject of a suspicious activity report, which is a shockingly high number and strongly suggests that criminals and other bad actors are using anonymous shell companies to launder money. FinCEN's GTOs were then extended last year and also expanded to include LA, San Francisco, San Diego, and San Antonio. So I have 2 quick questions. First, has the beneficial ownership information that you've been collected after you renewed the program continued to be useful for FinCEN? And secondly, doesn't this suggest that one of the keys to cracking down on money laundering and terrorist financing, which is a top concern of New York, the city I represent, is requiring companies to disclose their beneficial owners, at least to law enforcement?
The answer is yes to both.
Okay, thank you very much, and I hope we didn't miss our votes. We've got to run. Thank you.
We've got
Thank you,
6
Mr.
minutes
Chairman.
left, so the chair now places the committee in recess until after the votes. To order. We've got a couple of members coming in for questions. Until then, I would recognize myself. So you talked about implications for bankers and that we're there to work together to get. You're just not after gotchas. What about the people who are filling out the forms if they fill them out incorrectly on purpose? Tell me a little bit about the consequences.
That's a very good question, Congressman. That actually was a
And if
question
you turn on your mic there, I think.
It's on. Maybe I'm
Okay,
just not speaking
all right,
into the mic.
okay.
That's a very good question. In fact, a question that I asked myself. Of course, being a prosecutor, I want to know what the consequences are. Right now, the consequences are no penalty provisions to the false information given. However, I think it really depends on what they say, right? They could be prosecuted for bank fraud, depending on what information they choose to lie about and the consequences to the bank in which lying it. But right now, the consequences are that they'll be investigated, probably. But there is no crime with respect to that, at least that I know of. No penalty provision with respect to the CDD rule.
So how do they come to the attention? How do we know that people are not, how do we know that the banks are not gathering the latest information and that people are submitting bad or improper information?
I think two ways, Chairman. One way would be that the banks, through their normal due diligence, would discover, right, that this information is false information. It could be that the bank person who is actually doing the intake of the information will recognize the red flags. And I think the third way to do it is that law enforcement themselves, when they run these names, realize that the information is incorrect. And right there, that's a red flag that perhaps this legal entity should be looked at, or the individual opening the legal entity, the customer himself or herself, should be looked at.
Okay, and I would now yield to or would recognize the gentleman from Nevada, Mr. Gottheimer, for 5 minutes. Would then recognize the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Thank you, Chairman, and I really appreciate your testimony today, Director, and I appreciate the opportunity to talk about some of the rulemaking there. A number of issues have been raised as banks have attempted to come into compliance with the consumer due diligence rule and the frequently asked questions that have been issued by FinCEN aiming to clarify the rule have in some cases had the reverse effect of complicating and confusing its requirements. For example, who should actually be listed as the beneficial owners that a bank might need to report? It's very clear when you say 25% or greater, but when, for example, significant influence. And from your previous testimony, perhaps every time a company updates their org chart, there might be a trigger to say, gee, we just hired a new plant manager at one of our facilities. Do we have to update our org chart with FinCEN? And then the premise is that all the small businesses in America, many of the smallest, least sophisticated businesses of America, are criminals if they don't keep these forms updated. So it seems the burden is heavily shifted to law-abiding citizens to somehow keep the government apprised of their privately held business, instead of on this organization that we created and asked you to lead to do the work to find this information out. I guess, do you believe that some of the same, perhaps even some complicating factors may arise in terms of how beneficial owners should be reported? If you think about the kinds of businesses that you're asking to comply with this, admittedly simple to use form, but at what level in the org chart do I say this person isn't exercising significant influence over my business?
Congressman, what the form asks for is just one individual if we're talking about a control prong, right? We're only asking for one person. We're not asking for a litany of people who may have responsibility or control over the legal.
I just need the CEO? Is that fine?
You could put the CEO, you could put the controller, you could put a senior manager. It has to have somebody who has decision-making and that is responsible for making decisions.
You just need a name. You don't need all the names. You just need a name.
You do not need all the names.
Okay. So the other complicating factor is there are a number of folks that will have issues with the shift in basis, which is the default is if a newly created business is established, the government collects a fair bit of information, and they don't necessarily collect all this in a way that would make it easy for FinCEN to access, but in a lot of ways it seems that it would be easier for us to lower the threshold for you to obtain this information than to criminalize every business in America unless they fill out this admittedly easy to fill out form.
But Congressman, we're not criminalizing these individuals. I mean, people are going to make mistakes. We get that. The question is, are they intentionally falsifying documents to avoid actually listing who the beneficial owners are?
I understand, and the basis there is to say that you're going to focus on a certain number of companies. You're not focused on every small business in America, yet you make every small business in America fill out the forms. That's the gap. So you're heavily focusing on financial institutions, it seems, and they're charged with enforcing the rule. Do you believe FinCEN has the technical expertise and capacity to properly enforce CDC regime being applied to small businesses, which have never heard of the CDD rule?
I believe,
or FinCEN, for that matter?
I'm with you on that, Congressman. I think that I think we can. I think we do have the tools to enforce it, and I think we're doing a great job of doing outreach also to these small institutions and other institutions who are covered by this rule. We're going to do a better job of doing it. We're out there speaking. This whole hearing, I'm sure many of them are going to be interested in watching it as well. So we are going to get out there and make sure that there's
Do you believe the IRS already has enough information, or any other part of the government would already have enough information if you could just ask them?
No. We wouldn't be doing the CDD rule if we thought that.
I guess we can disagree on that, and I think the last thing is just a specific one on CDs. Mm-hmm. Every time a certificate of deposit changes, you roll it over, you might hold it with a bank, it's the same thing. So you might have every 90 days you're updating a certificate of deposit. It seems like a pretty heavy burden on banks. You're confident you got the rule right on that?
In fact, today we're issuing exemptive temporary relief on instruments just like the CDs that roll over. We're going to spend more time thinking about them and what we need to do. And these are for CDs that pre-exist the implementation of the rule on May 11th. Looking into the future, these CD rules, as long as the information doesn't change, and we leave that for the banks to tell the customers, and the customers must agree, if any of the information on your beneficial ownership changes, you must notify us. So I don't see that that's going to be too much of a burden moving forward. And as you will see today on our website, and we've noticed it today, that we are issuing temporary exemptive relief on those that pre-exist the date of the implementation.
Well, I think that you feel too much immunity from the regulatory impact that is being inflicted on America's economy and America's small businesses. And with that, my time's expired, and I yield, Chairman.
Gentleman's time has expired. Chair, and I recognize Mr. Lynch for 5 minutes.
Thank you very much, Mr. Chairman. Thank you for your work on this committee, and thank you, Mr. Blanco, and congratulations. I haven't seen you since you received your promotion.
Thank you.
I'm a big fan of FinCEN, and I'm a frequent flyer to FinCEN's offices, and a frequent advocate for more funding for the work that you do and your folks do within Treasury, although I know there are a lot of competing claims within Treasury for those resources, so I try not to cause too much trouble there, but
thank you for your support.
Suffice to say, we work with your folks regularly, and everybody up on the committee does, and we really appreciate the work that you do, and we understand the relevancy of all the work you're doing. So among the key findings that FATF had back in 2016, the Financial Action Task Force, they evaluated sort of our AML, anti-money laundering protocols, and counterterrorism, counter-finance and terrorism protocols. And they said that one of the chief weaknesses was, and I'll quote them, lack of timely access to adequate, accurate, and current beneficial ownership information that created fundamental gaps in the U.S. context. So the new implementation of customer due diligence requirements, do you think that will be enough to address the weaknesses that they've identified in our system?
I think it's one step in identifying the weakness. I think there's another weakness, as most of you know and talk about, and that is beneficial ownership information at the point of opening a corporation, of starting the legal entity itself. That's going to be critical for us to know and to understand and to use.
Right. The other piece that we're working on quite a bit, the chairman has put a lot of focus on this, is cybersecurity within the financial sector. And I've sort of been thinking this through to try to figure out a way that we might get the financial services industry to more robustly police themselves. They're always complaining about overregulation. If we can get them in as a partner, a willing partner, then it might be a better result. But one of the things I've been considering is draft legislation to establish a financial sector cyber stress test council. This is unlike the other stress tests, which is governed by FSOC, an external regulator. It would really be an industry-driven, but we would obviously see what they're doing, but require them to periodically upgrade their systems so that it seems as the hackers evolve, they find these weaknesses in our system, and we don't regularly update, so we're having these repeated failures. Would something like that help you in terms of establishing a standard out there and a level of accountability that requires continual upgrade periodically? Because that's what the hackers are doing. They're plus-upping their methods, and they seem to be able to find that weak link.
One of the priorities I have here at FinCEN, and I think I might have spoken to you about this, is cybersecurity and cybercrime. And I think it's going to be really important for us to get a handle on that moving forward. And to your point, it evolves. There has to be a constant effort to renew what resources we're looking at, what kind of technology we have to move ahead of the game. And in fact, I have put somebody in my front office that has been charged with innovation development and technical development moving forward for FinCEN to look at issues just like that. Happy to work with your staff on anything that you're proposing. Happy to have that discussion about it. I can tell you that we work regularly with industry, as you know, about this technology. We were just on the West Coast talking to some of the virtual currency exchangers about this kind of technology and how we move forward and the attacks that cyber hackers are doing on information that not we have, but in general in the financial system.
Right, so I will work with my Republican colleagues to see if we can come up with something that's suitable to both sides, and also reach out to you and to the industry to see if we can come up with something that's a consensus approach to this, rather than have people, have to amend it later on. But
Happy to talk to you about it.
Thanks for your great work, and thank you, Mr. Chairman. I yield back.
Gentleman yields back. Chair now recognizes Mr. Budd for 5 minutes.
Thank you, Mr. Chairman, and thank you, Director Blanco, for joining us today. Appreciate that. So I want to talk this afternoon about the lack of clarity surrounding compliance requirements under the CDD rule. Financial institutions back home are still not entirely sure what they could potentially be held liable for. In the latest FAQs on the rule released by FinCEN, while it's helpful, it's still highlighted some issues that need to be addressed. So first, I'm curious, in developing the FAQs that were published on April 3rd, was there any discussion with industry representatives to understand the potential impact? And let me give you an example. Question 12 treats the renewal of a CD or a loan as a new account, which is inconsistent with the industry's approach. So was there any discussion with industry on that?
Lots of discussion, Congressman. In fact, today I issued temporary exemptive relief on that one issue so that we can have further discussion on it. We've given industry 90 days, sort of exempting them from having to comply with it so we can better understand the rule. They have a very sympathetic ear in me with respect to that, and we'll take a look at it. I'll make a decision whether or not we provide permanent exemptive relief moving forward. But we've had, I got to tell you, Congressman, one of the things, and look, I've only been in this job for 4 months, but I have to credit our FinCEN staff for, since 2012, has really been talking to industry about this and learning from them. And we've taken what we've learned, and you'll see we've done 7 or 8 different tweaks to the rule. We provided several exemptive reliefs, not only in premium financing, but also on the rollover, automatic rollover accounts for pre-existing accounts. So we're listening, and I think that they should be happy about the fact that we are engaging with them regularly.
I appreciate your ear towards industry on that. I want to continue. So the FinCEN FAQs, as well as the FFIEC manual update, it stated that banks still must update beneficial ownership details when opening multiple accounts. So what is this bank supposed to do if a customer doesn't respond to calls or emails or letters to confirm that their information hasn't changed?
So I think that, that really goes to the bank's risk assessment and how they use their protocols to make that determination. I can tell you, Congressman, that what we have done, both with our federal regulators and also industry, is we've discussed with them that any time a new rule like this one is being issued, there's going to be this time period where we're going to take a look and give people the ability to implement it without coming and saying, well, you didn't do this, or you didn't close that account. There's this time frame where things need to be worked out both in the regulatory side and in the implementation side. We're very mindful of that. But in the instance that you just talked about, I got to tell you, it certainly is wondering, if I'm the banker, why you're not getting back to me. And they have a better risk assessment of their client than I would, and I think the regulators will take that into account.
Appreciate your thoughts on that. And so, do you expect banks to follow the FinCEN FAQs as if they equate to regulations, or rather if it was formal guidance? And even though they were released without industry feedback and a comment period?
Actually, they were released with industry feedback. One thing about the FAQs, which is really interesting.
Sorry if I interrupt. Also, did it have a comment period?
They didn't have a comment period, but
did not have a comment period.
Not with the FAQs, but the rule certainly had a comment period that lasted for quite a while. If I'm not mistaken, I think it lasted for 2 years or more, correct? But the FAQs, interesting thing about the FAQs is before we issue FAQs, there is a lot of discussion with industry and with law enforcement and with other individual stakeholders before those FAQs come out. So it isn't as though industry is seeing those FAQs the day we publish them. Some of them are, but for the most part, many of them have had discussions in panels, in hearings, in conversations with us, through our call-in line. We have a call-in line where people can ask questions about the rule. So a lot of this has already been hammered out before those FAQs have even come out. And these tricky issues, the FAQ answers the tricky ones. So you're talking about the ones that are the most difficult for industry and frankly for regulators too to understand as we implement the new rule. And we're working with industry to make sure that we do it right.
Thank you very much. And in the time remaining, one question. And finally, is FinCEN concerned that banks might close accounts if they can't collect the information, particularly since that would cause FinCEN and law enforcement to lose that information?
That certainly, Congressman, is something that we're going to look at and make sure that if there's a trend in that way, we will certainly look into it and see why it is happening and what we can do about it. You're right, we end up losing valuable information, and also people end up losing access to capital, right, which is not what we want either. So we'll be monitoring that.
Thanks for your time, Director. Chairman, I yield back.
Gentleman yields back, and the chair now recognizes Mr. Hill for 5 minutes.
Thank the Chairman. Thanks for holding this hearing. Mr. Blanco, glad to have you with us today. Thanks for your work on behalf of law enforcement. I read in the CDD discussion that the annual cost had a range that you all have assessed up to around $280 million on the high end. Right. How many SARs that FinCEN receives every year would be directly related to, a shell company report from a financial institution? Would you just hazard a guess?
I think I'd probably guess incorrectly. Given my background, I would say a lot, right? But I don't want to give you the wrong figure. We're happy to get back to you.
Yeah, if you'd get back to me on that. So I know you report the total number of SARs, but if you'd tell me how many SARs relate directly to a bank reporting to you about a concern over a, quote, shell company, however the bank defines shell company.
Yeah.
From criminal indictments that you've brought in this arena, how many would turn on a shell company, and how much money have you recovered from indictments that are connected directly to a shell company?
So I can tell you with respect to investigations that we've done, if they're sophisticated investigations, multi-million-dollar, whether they're fraud investigations, we're not just talking about drug trafficking and human
Right.
trafficking or terrorism, right? We're talking
But they
about,
meet the definition of FinCEN. Yeah.
right. We're talking about fraud of the elderly, right? We're talking about, really significant things that affect people. Almost in every one of those very sophisticated cases, you're going to have a shell company someplace involved, because that's the way they're laundering their money, and that's the way they're moving their money, and that's the way they hide from what they do. And you don't have to go too far to see those kinds of cases. So it depends
Do you
on the
think
level.
the banks are doing a bad job collecting that information and reporting it since the Know Your Customer rules were put in place?
Can I just tell you, I think the banks are doing a great job. I think they're doing their best, and I think they want to do even more and even better. So I wouldn't say they're doing a bad job. I think what we need to do is what we're doing here today, right? Having hearings like this, inviting industry, having the conversation, giving them priorities, right? These are sort of our priorities, banks, and this is what we're looking at together with law enforcement. I think that would better help the banks.
When I think of a tax haven, what comes, when I say the word tax haven, what pops in your head? Country,
Wow.
name a country.
Congressman, I can't go there. That would.
Is Panama a tax haven?
The obvious ones. I've done a lot of work in Panama, and I've done great work with their government, and I enjoy working with them, and they're dedicated public servants just like we are. So I wouldn't identify.
So would this sentence in the memo that we were given be hyperbole, where it says that the United States risks being labeled as a money laundering, tax avoidance, and terror financing haven? Would you say that's hyperbole?
I think there may be some countries that would say that, but I think that's hyperbole. But
Yeah, well, the Financial Action Task Force said it. So I find that kind of shocking that an organization that we support would say that.
one thing,
Let me keep going. I've got limited time. Sorry. Has Congress asked, or has the Treasury Department asked states for changes in state law that would be best practices for secretaries of state, that they capture name, email address, all the data that you're looking for all company formations by state, and make that available online, and that it also contains some state penalty for non-accuracy or not being updated? Have you ever called for that, or to your knowledge, has Congress ever asked the states to do that in model legislation?
not in my recollection. They
Would
may
you
have, but
support
I
that?
wouldn't know.
Would Treasury support that if the states had a telephone number, email address, and contact person as just a best practice that was required under their state law?
The devil's always in the details and how it works out. I think it's something that we can certainly think about and discuss. I think it's always great to have the states involved at the corporate formation level, but we can't make them do it.
Yeah. So Mr. Davidson asked you a question about access to information you have or could have under a criminal investigation. So the SS4 taxpayer ID number form that the IRS have and the annual tax reform data, including ownership, is that data that would be helpful to you in searching for shell company beneficial owners?
Honestly, Congressman, no. I mean, it's different information.
Why?
Because what they're asking for is something very different. And if you look at their definition of it, first of all, two things. One is getting the information is very difficult, but you need to get a court order. And having done that and spent months trying to get one, that sort of defeats the whole AML purpose. But if you look at the definition of what they're asking for when they talk about responsible party, they're not talking about an equity party. They're not talking about somebody who would benefit from that legal entity and what they're doing. They're asking for a responsible person. A responsible person could be, I'm sure that the IRS has their own definition of what a responsible person is, but it's not what we're looking for. We're looking for somebody who is making decisions, who has some kind of interest in the corporation, both either on the equity side or the control side.
My time's expired, Mr. Chairman. Thank you.
Gentleman's time has expired. The chair would now recognize Mr. Tipton for 5 minutes.
Thank you, Mr. Chairman. Appreciate you holding this hearing. Mr. Blanco, thank you for taking the time to be able to be here. I'd like to be able to follow up on Mr. Budd's questions just a little bit. We seem to have some evidence that in terms of de-risking, it's been showing to be able to push customers from larger institutions into smaller institutions. Obviously, the bigger institutions have the financial resources to be able to do the exams, to be able to handle and have the backup people that are there. And I guess my question to you is a little bit twofold. Do you anticipate that the CDD rule and de-risking trend is going to trickle this down to the smaller institutions to the point to where they may stop offering products and services, getting people unbanked. And then as a little bit of a follow-up to that, I think it was in comment in relation to the CDs being individual new accounts coming up. You'd made the comment that I think you said, I think the regulators will take this into account. So I'd like to know if you've had conversations with Federal Reserve, OCC, FDIC, and others issuing guidance in terms of how they are interpreting what you're trying to be able to develop.
Let me answer the first one on whether it would trickle down. I don't believe that the CDD rule would trickle down and have an effect, but it's something that has been commented on by more than several people, and it's something that we will monitor. We want to make sure that we're looking at that very carefully, and if the bank accounts are being closed or denied, we want to make sure that we understand why that's happening. And look, as we have done in the last couple of weeks, we're happy to make tweaks as we go along in this rule. We're not adverse to doing that as the rule becomes implemented and as our federal examiners begin doing exams. With respect to the CD rollover, we have had conversations with our federal counterpart regulators, and I think we're all in agreement that there's going to be this time period where we're learning how better to do the exams with respect to the CDD, and we're learning also how industry is beginning to implement it. It's not a gotcha game. I think we all agree to that. We have agreed to work with them as they do their exams and learn from their exams and maybe participate on in some of their exams as we move forward. I think it's going to be a collective effort. Nobody here is playing the gotcha game. What we really want, Congressman, what we really need is accurate information. That's what we want. That's what we're looking for. We're not looking to punish the financial institutions. That's not what we want. There's no value in that.
Well, and I would concur. I think we all want to be able to achieve the same goal. But just given the industry concerns that currently are there, I think that it does beg for some real actual clarity in terms of some of the enforcement that's going to be going on. You've just said we're going to be, it's kind of a work in process, but I think when we're talking to, and I've got a primary concern for a lot of our smaller financial institutions, smaller credit unions as well, in terms of some of the compliance costs and that are going to be associated with this. How does that actually play out when they've got a moving target while they've got some enforcement activities if they are deemed to have been at fault at some level?
Well, Congressman, I'll disagree with you in that aspect that it's a moving target. Look, the conversations regarding CD really have gone back all the way to 2006 when we started talking about these things. Then it morphed into conversation with industry. We've had several hearings. In 2012 it came up. In 2016 we issued the rule. We've had extensive conversations. And in fact, Congressman, just recently in meetings with industry, they all said, I was approached myself and said, Ken, this thing needs to happen. Do not delay it anymore. We are ready. So I think that, and I'm very sympathetic to the community banks and the credit unions. I really am, coming from a suburb of Miami. I'm very sympathetic to it. We will be watching it. Congressman, they're ready, and I think they're going to do a great job moving forward. We're working with our examiners to make sure that they understand what we're looking for. We're sympathetic to what they're examining for, right? Soundness and safety, and also AFC, AML, CFT. It is a work in progress, like any new rule or any new legislation that's passed. You've got to work out through the difficulties of how you're going to examine and how you're going to enforce it. But we're going to be doing it with our ultimate goal of making sure that we get the right information, not necessarily hammering people. But there are going to be some people who, frankly, I can tell you, we're all, adults here, who feel like they don't have to comply, or they have to comply only when we issue a notice of exam. That's when all of a sudden you see 50, 60 people show up because now they got a compliance section. That's not compliance, and that's not complying with the CDD rule.
Well, again, appreciate the efforts that you are making on it. And I think am actually empathetic to the point of making sure that we're trying to be able to get it right rather than just issuing a hard and fast rule. Would like to make sure that I personally at least encourage you when we're looking at some of the enforcement, we get as much clarity as soon as we possibly can, and then implement some of that flexibility as we're seeing this work out through the various institutions of different size as well. So
thank you,
go back, Mr. Chairman.
Gentleman's time has expired. Mr. Blanco, thank you very much for your testimony. Thank you for your service and for being here today.
Thank you,
Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for your response. Ask our witness to please respond as promptly as possible. This hearing is adjourned.